the leverage is crazy. So that's why we open the mint, because for us to take our production off the market, and you do that math, for us to take 10 million ounces off the market, just for easy math, that's the equivalent of taking 3 billion ounces out of the paper market. Yeah. I remember when Putin was, in the gold vaults in Russia, when he was holding, his gold bar. This is like, I guess, 4 or 5 years ago. And, pretty famous photograph of him inspecting the Russian gold hoards that they've been buying over the last several years. And so he's standing in the vault, and I zoom in on the photograph, and along the back wall, there's this whole line of pallets of silver bars. And I go, wow, there's a lot of silver there. So, and they don't report it. So, is that where the silver's coming from? I have no clue. We know China's not exporting silver. It's against the law in China to export silver. We know in India they're buying silver. Mm-hmm. They're big consumers. So it's a very valid question, and it's a very secretive industry, and we don't have an answer.
Keith Neumayer, the pioneering mind behind First Majestic Silver, sheds light on how essential this precious metal is in powering virtually every device we depend on today. From smartphones to solar panels, silver's unique properties make it indispensable. Yet, as Neumeyer explains, the journey of bringing silver from the mine to the market is fraught with challenges, demanding massive investments, intense labor, and a strategic approach to navigate the complex global market. Keith's innovative strategies don't just stop at mining, they extend into market manipulation aimed at enhancing silver's value. By using First Majestic's mint to limit the market supply of silver, he introduces a novel approach to potentially drive up prices. This strategy includes creating unique products such as limited edition silver coins and themed merchandise for niche markets like sports fans, showcasing the versatility and cultural integration of silver in our daily lives. However, the silver market is influenced by broader economic forces that can suppress prices despite its significant industrial use. Neumeyer voices concerns about macroeconomic trends and market dynamics that could mislead young investors. His insights offer a stark reminder of the complexities of investing in precious metals and the economic uncertainties facing future generations. Through his leadership at First Majestic, Keith Neumayer remains a key figure in promoting a deeper understanding of silver's role in modern technology and the global economy. Now we'll show you more excerpts of the latest interview. If you find our recaps valuable, smash that subscribe button and share this video with a person that stacks gold or silver.
If you're Sony or Tesla or BMW, doesn't really matter who, and you need to have 20 million ounces of silver for your product that you're producing in 2024, you're going to approach the big traders, which is pretty well JP Morgan or HSBC or whoever they are.
Yep.
And you're going to sign a contract for delivery of those ounces, and you're going to tell that bank to deliver those ounces to whatever port that they need to be delivered to. So as a miner, we sell our ounces through a trader to the banks. The banks know how many ounces they're going to be getting because they know the market quite well. Of course, they leverage those in the paper market because they're shorting against that purchase. So Sony buys 20 million ounces, they leverage that up 300-400 times in the paper market. And it's in their best interest to not allow that spot price to change that dramatically, because all of a sudden, and that whole run in 2011 from $40 or call it 35, depends on who you listen to, but $40 to $50, that was all short covering, and the banks were in super stress during that period of time. There's talk about that's why Bear Stearns, I think it was, or whomever ultimately went bankrupt because of their big paper derivative position on silver. Whether that's true or not, who knows? But, there's lots of information on the internet that you can find, that discusses that topic. There's a big short position in the market, and it's all held by the banks, and it's all because silver is a very commercial market, and it's very thin. And this, these guys, and these are young 30-year-old MBAs out of college that have no clue about the supply and demand fundamentals of the metal. Yet they've been shorting silver for the last 30 years. But they don't know that the above ground supplies of silver back in the 80s was 5 billion ounces. And back then, there was no electronic uses. The electronic uses just started coming in. Today, the above ground supplies are about 1 billion ounces, and it's all in ETFs. So all that above ground supply has been eaten away in electronics, and and no one's recycling cell phones or computers. All that computer waste is just thrown into dumps.
In today's market recap, hot commodity silver outpaces gold as buying gains momentum. Gold's record-setting rally may have captured the headlines this year, but it's silver that's running harder and faster as the less glamorous metal benefits from robust financial and industrial demand. Silver has soared by more than a quarter this year, outpacing gold and making it one of the year's best performing major commodities. Yet, in relative terms, silver is still cheap. It currently takes about 80 ounces of silver to buy 1 ounce of gold, compared with the 20-year average of 68. The two metals move largely in tandem as both offer similar macro and currency hedging properties, with gold hitting a record on central bank buying, retail interest in China, and a resurgence in bets lower U.S. interest rates are on the way. Silver's gone along for the ride. Now we'll show you the best clips of the latest interview where a financial expert discusses this macroeconomic events in detail and explains you how to be positioned for maximize your stack. Smash the subscribe button, hit the like button, and share this video with someone who loves stacking silver. Enjoy the episode.
90% of all silver that's been mined is gone. It's in waste dumps. It's in the ocean. It's gone. 90% of all gold that's been mined is still sitting on the surface in vaults, in hoards, and so on and so forth. So, silver is very much a depleting asset because, in this cell phone, like, my little Apple here, there's about $2 or $3 of silver in this thing. And to take it out, it would cost a fortune because Apple is very good at embedding that silver into that circuit board. And there's not too many technologies out there that can extract it in an economical way. So no one, recycles computer waste. And that's where a lot of our silver goes. And so it just, gets, put in waste dumps, unfortunately. And it starts from decades ago, whereby as a mining company, you drill a hole and you're relying on geologists that are telling you, okay, this is the right place to drill a hole. And so you believe them and you finance it. You got to raise the money. So you drill the hole, crossing your fingers that you actually hit something. And lo and behold, you hit some silver. And then you have to drill more holes because you can't just, rely on one hole. So you need to drill dozens and dozens and dozens of holes over, a lengthy period of time, 4, 5, 10 years in some cases. So then you have to put out proper disclosure to the regulatory authorities in order to raise substantial money. You have to, you're going to rely on the governments to permit the process along the way because, a variety of permits are necessary. Depending on the size of the property and the size of the asset or the size of the resource that you drilled out, it depends on how much money you're going to have to raise because that is going to be dependent on the size of the mill you're going to build. So you're by 10 years in, you're starting construction, and you're by the time you're in production, you could be, call it 10 to 15 years in, and you're probably, 200 million minimum, and probably even up towards 500 million, or even if it's a larger mine, up towards $1 billion invested to that point. You still don't have any revenue yet. You're still relying on permits. You're still relying on governments. You're crossing your fingers that the governments don't change, regulations don't change, that the governments are still supportive of what you're doing. You hope to get the communities on side. You hope to get people, employed, because a lot of times you have to build towns, build electrical infrastructure, build water infrastructure, build roads, because lots of times these mines are in the middle of nowhere. So now you're 15 years in, and you're finally into revenue. So whatever the number is, $500 million to $1 billion invested, it's going to take you likely 10 years to get your investment back. So at that point, it's all metal price, right? And we all know how metal prices fluctuate. So you have to have a pretty darn good asset and good people in place that are watching their costs in order to, pull out a profit from that operation. So by 20 years in, 20 some odd years in, and every mine's different, of course, as I said earlier, you start to, get a positive cash flow. And hopefully your mine is going to be operating for the next 20 to 30 years after that. And the community is robust and bustling, and you build schools, elementary schools, secondary schools, and you're educating people, and there's stores opening, maybe a movie theater in town, and you built a community from zero, from scratch.
Do you agree with Keith Neumayer? Is silver going to hit $50 in a heartbeat, or are we going to get the usual dump driven by the paper markets? Are you selling anything below $40? Post in the comments section down below your honest opinion on this move in gold and silver prices, and watch this video right here because it's a perfect fit for you. I see you on the other side.